Closer look now how major stock markets around the Asia Pacific closed out Wednesday trading. Timothy Pope is live for us in Shanghai. Megha Chaddah is in Hong Kong for us, and Stephen Ross is in Tokyo. Tim, to you first. Reporting season, of course, is in full swing now, but that didn't do much to spur market sentiment today.
That's right, Michael. It was another so-so day for the Chinese mainland markets. They still really failed to gain much traction. There's still no public movement on trade, and some disappointing earnings figures from some sectors, which saw the Shanghai Composite slip by another 0.5% today. The small-cap Chinex board, though, managed to limit its losses to less than 1/5%. One bright spot was China Life Insurance. It posted huge jumps in profit late yesterday. For the year to September, net income is up more than 480%, thanks in part to tax relief measures and some bumper investment returns. So its stock was up by around 5% today. But on the flip side, electric car maker BYD was a big drag. It revealed an 89% profit dive for the third quarter and some expectations of deeper slowdowns for the firm in the fourth quarter. It was down 6.8% in Shenzhen today on the back of those numbers. The issue is, of course, the cutting back of subsidies for new energy vehicle purchases. That's caused a significant drop in demand from consumers, as China's biggest NEV maker, of course, BYD, is being hit particularly hard. It's got a dual listing in Hong Kong, and its stock there sank by 5.7% today. And for more on how the markets in Hong Kong did this Wednesday, Megha Chaddah is, of course, standing by in Hong Kong. Megha.
Thanks so much for that, Timothy. And well, let's start off with the overall market mood. It was quite somber. That's really been the case throughout Asia. We had both the onshore as well as the offshore market losing out a fair bit. Over 0.5% of losses is what we've seen. The small cap indices as well, came under a fair bit of pressure this for today. Overall, we've had pressure coming in the form of financial stocks, in terms of property stocks. We've all seen a fair bit of sell-off there. Like Timothy pointed out, we're in the middle of the earnings season, so one stock I'd like to flag off is Standard Chartered Bank. Remember, Hong Kong contributes a fair bit to this financial powerhouse, and the company posted a better than forecasted rise in its quarterly profits. The pre-tax profits jumped 16%, and that was helped by rising income from corporate as well as private banking clients. However, the bank did flag off headwinds from a likely drop in global growth as well as lower interest rates. In addition to that, of course, the economic uncertainty as well as the political situation in Hong Kong is likely to impact the company's numbers going ahead. But overall, in the third quarter, the company did manage to do quite well, and the stock was up about 2% today. And Timothy spoke about electric car major BYD. In fact, it is also listed in the Hong Kong stock markets, and the profits there fell as much as 43% after the sales of new energy vehicles plunged following the cut in the government subsidies, and this was the top loser on the Hang Seng index as well this afternoon. The stock was down a fair bit. In fact, it's seen one of the worst days since March 28th of 2018. So overall, fair amount of pressure and a lot of volatility coming in from those earnings names. But Steve is here with more details for us from Japan.
Well, thank you for that. Japan's benchmark Nikkei index pulled back from its highest level in more than a year today as conflicting signals from the U.S. government dampened optimism for a preliminary trade agreement with China. The Nikkei closed down 0.57%, its biggest decline in 3 weeks. Investor enthusiasm flagging after U.S. administration officials revealed on Tuesday that an interim U.S.-China trade agreement might not be completed in time for signing at an Asia-Pacific Economic Cooperation Summit in November. There were 143 decliners on the Nikkei index against 79 advancers. The largest percentage losses in the index were electronics manufacturer NEC Corporation, down 5.83%, followed by rival electronics manufacturer Omron Corporation, losing 5.17%. Packaged food maker Nissin Seifun Group jumped 8.96%, and electronics conglomerate Fujitsu Limited rallied 7.74%. That's it from me and the rest of the Asian team. Back to you, Michael, in Beijing.
All right, so it is certainly a risk-off day for APAC shares. Many thanks for those updates. Timothy Pope over in Shanghai. Megha Chaddah in Hong Kong, as well as Stephen Ross for us in Tokyo. Thank you.
Time now for a check at how stock markets around Asia are performing this Monday. Now, stocks here are buoyed today on the back of latest positive signals around the China-US trade talks, as well as indications of resilience in the American economy. Tokyo is on a market holiday today, and we now live cross to Timothy Pope in Shanghai and Megha Chaddah in Hong Kong. Starting with you, Tim. Now, stocks on Chinese mainland are up today. Walk us through the highlights of the day, please.
Yes, Lily, there were gains for the major mainland indexes today, despite a slightly wobbly afternoon. It's also looking increasingly likely that the CSI 300, that's the index of the biggest Shanghai and Shenzhen listed stocks, will be the world's best performing index this year. It's up more than 30% since January, far outpacing gains on the rival markets in the US, Japan and especially the UK. And this is largely because China's rally this year is really highly concentrated in only around a dozen individual stocks. Today there were also some hopes on the trade front after US officials said they were hopeful that a phase 1 deal could be signed this month. Shanghai Composite locked in gains of around 0.6%, and the China Next board did a little better with almost 0.8%. Airlines were really the standouts today. The yuan was continuing to rise against the dollar, giving them a bit of a lift. China Southern Airlines was up around 8%, Air China up more than 7%, and China Eastern gained 4.7%. And we continue to see some money coming in via the Stock Connect links with Hong Kong. Foreign investors buying for the 8th day in a row today. Some analysts are suggesting that there is a rush to buy mainland stocks before MSCI releases its next semi-annual review on Friday, which could see more mainland stocks included on those indexes. That's all from me, but Megha Chaddah is standing by in Hong Kong with the latest there. Megha.
Thanks very much for that, Tim. And quite a buoyant day for the Hong Kong markets as well, as we closed out Monday's trade up over 1.5% on a very strong note. The markets ended over 27,500 levels. Now, despite the protests continuing, the markets have been quite resilient, and we are now back at levels that were last seen in early August. For today, the uptick came in from the pharma sector, with CSPC Pharma leading the charge as the stock's target price was upped by UOB to $24.7 from the earlier $18.8. Another smaller name that showed a lot of traction today was Louis Pharma, as the company added over 9% in market capitalization as it made progress towards getting a drug approval from the United States. Besides that, rate sensitives also saw steady buying, as did energy stocks. The big movers here were the AIA Group, Bank of China Hong Kong, as well as CNOOC. The pressure point really, there weren't that many today, but we did see telecom sector, losing some steam, as well as select real estate names like Wharf Real Estate. And on that note, back to you, Lily.
Great stuff. Thank you very much. Achieve a picture in the markets. That was Megha Chaddah in Hong Kong and Timothy Pope in Shanghai for us.
We now cross to Timothy Pope in Shanghai, Megha Chaddah in Hong Kong, and Stephen Ross in Tokyo. Tim, to you first. The Shanghai and Shenzhen markets continue to push higher today. What's the story there where you are?
Yes, Jinfeng, the Chinese mainland markets followed Wall Street higher today. The Shanghai Composite back within spitting distance of the 3,000 point level today. It's cracked that a few times this year, but it's never been able to gain a foothold above that. It's now within 10 points at around 2,991. But once again, hopes of a trade deal are pushing the indexes higher. It gained more than 0.5% today. Sector-wise, the attention was largely on financials and tech stocks, although most sectors were trading in the positive. The spotlight, though, was on Great Wall of Cultural Group. Now, this is a pottery company which recently surged after announcing that it was expanding into blockchain, which is a bit of a leap. Anyway, the regulator has initially asked the firm a couple of questions to explain why they're making this switch and wanting to make sure that it wasn't just an attempt to jack up the share price. Now, that share price almost doubled in less than 2 weeks, and now the regulator is actively investigating this firm for suspected disclosure violations, and the firm is down by 10% today. They're the highlights here in Shanghai, but Megha Chaddah has the latest from Hong Kong. Megha.
Right, and it was a great day for regional stocks, wasn't it, Tim? The picture was pretty steady in Hong Kong as well. We are now looking at 4th day of gains here. This despite the IHS market survey that showed that business activity in Hong Kong's private sector fell to its weakest in 21 years in October. It was weighed down by the anti-government protests that we've been seeing, as well as overall softening global demand. The PMI numbers for October came in at 39.3, which was down from the earlier 41.5 in the month of September. In terms of individual stock action, energy major CNOOC hit a 6-week high. We've had Daiwa upgrading the stock to an outperform from its earlier hold rating. They've also upped the target price to 12.90, saying that the company's oil and gas output is likely to beat the overall full-year expectation. Shimao Property, that was another stock that was at 12-year highs after we had, the company boasting some very strong sales number for the month of October. In healthcare, we saw investors take some of those profits home today after the massive rally that we saw yesterday. So overall, yet another good day for the markets as we inch up. And Japanese markets open today after a break. Stephen, you've got more details for us.
We sure do. Thanks, Megha. Japan's Nikkei share average leapt to a 13-month high today after a long weekend with fresh hopes for a U.S.-China trade deal and upbeat Wall Street stocks lifting investor sentiment. Broad-based buying sparked a 1.8% rally in the Nikkei average to over 23,250, its highest close since October 10 of last year. In Tokyo, China, and semiconductor-related companies leading gains today. Chip-related Sumco advancing 3.1%, Rome up 5.1%, and Renaissance Electronics surging 7%. And Nikkei heavyweight SoftBank Group rallies 2.4%, becoming the second most traded stock on Tokyo's main board. Finally, reports that Xerox has agreed to sell its 25% stake in the joint venture Fuji Xerox to Fujifilm for $2.2 billion, ending the 57-year-old joint venture and leading to a 6.7% leap in Fujifilm holdings. That's it from me and the rest of the Asia team. Back to you in Beijing.
Thank you so much. That's Timothy Pope in Shanghai, Megha Chaddah in Hong Kong, and Stephen Ross in Tokyo.